Let me close all those things. I just finished my lecture, by the way.
Oh, okay. You were
Yeah.
doing a lecture?
Yeah. I'm having lectures on Sunday mornings. I have lectures. That's why I cannot.
Jesus.
Yeah. Yes.
Your hands are full.
Yes. Crazy. It's crazy. It's crazy. You won't believe it. But anyway, so let me share my screen here. Okay, let's pretend this is a borderline, right? Borderline that show you pass fail. Here on this section you are pass. On this section you are fail.
I didn't have a decline ranking.
Decline ranking. So the decline ranking is if it's 1.
I didn't have one.
Right?
I did not. I passed. Yeah, I was.
So
I was probably one of the few people who were sacrificed on the curve because
you should have then in this case you should have not challenge it asking for revision.
Really?
Yeah.
I didn't ask.
You should. If they don't give you what was that? Deco or whatever. That means you are very
Telling
close.
me this last minute.
Yes, they usually do
Is it
that.
still possible for me to go back and challenge?
No, yeah. The time of the challenge was very so. Some people I'm seeing people with 1, 2, 3, 4. That's how that thing goes. If you're 7, there is nothing you can do. Right now, I'm seeing people with 2. They're going back and challenge it. Nothing. They're not changing their scores. But if
I
you
didn't have anything. I didn't have anything. My friend
yes,
went back and challenged because he was told he failed assurance.
yeah,
And for sure they did they said how do you call it? He passed after he challenged it. He didn't have anything. I also didn't have anything and he told me you should have gone back.
yes,
But
yes,
I had
yes,
failed
yeah.
I failed depth. So I failed management accounting and both financial reporting. And I was very scared because I wasn't very confident in those.
Once you don't see any number, challenge right away. Don't even think about it. Now I see from the experience from the other students, if you have 2, they're not going to change it.
Yeah.
Now the question is, if you are 1, are they going to change it? Most likely not. But the way I was used to mark, right? The way because I used to mark those exams. So if it's fail, that means it's 100% fail. But I guess now with this decode, they kind of if you don't have anything, then you can challenge it. You should have challenges.
Oh my god. Okay, let's not talk about it anymore because this is so
Yes.
heartbreaking.
No, it's yeah, you can say it is heartbreaking. On the other side, take it as something positive. At the end of the day, it's in your benefits.
Yeah.
Right? Whatever it is, think about it. It's in your benefits because in this case now you can get even better. Okay.
Yeah.
So let's get you better. So let me. So you said 2015, correct? Yesterday you said that you were looking at 2015. I'm trying to get this 2015 here on the screen in terms of appendices and everything. So far, I'm doing very good. We're only doing assurance, right? Nothing else.
Sorry?
We're only dealing with the assurance.
Yeah. Okay.
Did we talk about the strategy on the exam?
No.
So my thinking and the way I'm approaching and the way that I'm seeing working the best for my students that I'm dealing with
Mhm.
is once you have a row, right? Once you have a row, first thing that you have to do on the exam, on the 5 hours exam for day 2,
Mhm.
you to get your row first. After you get your row, then you're doing everything else. The whole logic here is you need depth in your row,
Mhm.
right? If you don't have depth in your row, you're not gonna pass. Make sense?
Yes.
So, are you gonna pass if you have depth on financial reporting, but you don't have depth in your row? No.
Mhm.
So, what's the value for you to have depth on financial reporting if you don't have depth in your row? So, if you don't have depth in your row, you're out. You're not passing anyway, regardless what you're gonna achieve on everything else.
Mhm.
So, for that reason, first get the depth in your row. Once you get the depth in your row, then focus on everything else.
Okay.
Make sense? So
Makes
for
sense.
that reason, what I'm seeing from the exams and what I'm seeing from the comments from the students and everything is this. People usually focusing on when the exam starts, what's the first thing that you're doing?
They're doing financial reporting instead
What did
of
you do?
payroll.
What did you do in your last exam? How did you start your last exam?
My last exam, actually, funny thing, I started with my role. You know
Yeah.
why? Because usually when they start with things like audit plan and whatnot,
Yeah.
I already see triggers. I already see things, case
Right.
facts.
Yeah.
Because I can identify an AO for financial reporting, but I might have to come back and really read to attempt to bring out the case facts for my decision.
Right.
But let's say if I'm doing my audit role is always like, let's say if I'm told to do the audit plan. Audit
Right.
plan is gonna be there from the start. You're already being told things that are happening in the company that are
Yep.
triggered. So I already start typing.
Yep.
Usually before I even usually if I have an audit plan in there, audit plan is usually the first thing done because it's the easiest to get to, except for
Yep.
the materiality calculations, because I'm gonna need FR and triggers that things of that have changed. But if I already know like there are triggers already and I can say approach and materiality, those things are usually done in the first because I already know what's going on.
Yep.
But also for me, um, on my role, when they ask for procedures, as soon as I'm done with the financial reporting AO, I do the procedures soon afterwards. Why? Because I already know the triggers. I've already been told everything I need about that financial reporting item. So I do it immediately. I don't wait until the end. I do it there and then.
So for that reason, now that's what I'm advising my students. First of all, yes, from the case that we did yesterday, can you do all those things without touching the main case?
Uh,
Do we
which
even
case?
do we even need to read the case or solve any of the financial reporting issues before?
No, you
No,
don't necessarily need to go into even depth because some of the
right,
things are very easy to identify. Like
right,
the contract, for example, testing for existence,
right,
it's just there when
right.
they're already talking about it,
The
right?
question is, can you see it? The question will be, can you see it? Can you actually do it?
Yeah.
Right? That's what I want you to do. That's how you want. So because you have 5 hours exam. So
Mm-hmm.
again, good that you didn't take it this approach that everybody doing. But again, my logic is this: on the 5 hours exam, everybody starts with financial reporting and managerial accounting, which you also can get it from. If you miss it on day 2, you still have chance in day 3 to get it.
Mm-hmm.
But Euro, you have chance only on day 2. If you miss it, sorry, you're not passing both days. It doesn't
Yeah.
matter how good you are on financial report, on my financial reporting, on managerial accounting. You not passing. End of the story.
Mhm.
So for that reason, or what the people doing for any reason or whatever it is, what they're doing is they burning themselves. They literally, I can see them on the exam. They literally burning themselves on the financial reporting.
Mhm.
After 3 hours burning on financial reporting, what's the what they saying is, shit, now I have to do my role,
But
right?
they're probably left with a few more
Right,
minutes your
right,
role
right.
compared
But
to.
yes, and now you have like a 2 hours for your
Mhm.
role, and that's where the all the things start to kicking now.
Mhm.
In terms of the pressure, in terms of frustration. Now 2 hours left. I haven't even started my role. Oh my God, what should I do? Which one should I start first? And you can easily see on the answers, the first one or two assessment opportunity on your role are okay, and after that, the quality starts dropping and dropping and dropping and dropping, and probably on the last two assessment opportunity, you're gonna see only identification. There's not even discussions because you're already out. You're already stressed out.
Mhm.
So purely from the strategic point of view, I don't see any value for any student to start with financial reporting and burn himself on the financial reporting when financial reporting, it's not the key here. The day two is your role. For that reason, I'm always telling my students, go and chase your role. First 3 hours, instead of spending on anything else, get your role. Once you get your role, now listen, the one you see now, the one kind of one scenario is you're doing financial reporting, you're spending 3 hours, you're putting literally yourself going back and forth from the standards, trying to find the right standard and apply the case facts. After that, you're saying, shit, now I have to do my role. I'm done. So okay, so that's one. The next reality is this: you focus on your role, get
Mhm.
everything that you can on your role without touching the case, because most of the things now you can see, now we can see this huge swing between the cases of 2015 early cases
Mhm.
and the latest cases. On the early cases, yes, there's a correlation between the case and your role, but nowadays most of your role comes from the appendixes,
Yeah.
right? So do I need to touch the case? Most likely not. So my advice again is go and get your role. Once you're done with your role, then now 3 hours pass and you say now the momentum is completely different. Yeah. Oh, I get my role. Now let's see what else I can get. That's completely different approach, right? Now the momentum is different. Now the positive momentum that you're gonna get once you finish your role, it can carry you through the rest of the 2 hours. And you're not trying to get it done if necessary. You're just trying to get whatever you can. Now the tricky part is here. How to get with minimum effort maximum outcome. That's where it's gonna be. So basically you have to understand from what part you're gonna get C or C plus.
Mhm.
Make sense? So even so let me show you another thing so you can understand this logic. Let me share this Excel spreadsheet again. Let's say you can see this. So the marking guide is NA, NC, RC, C, C plus, right? So NA, nothing, zero. NC, identification. And RC is analysis.
Yeah.
On C, you're no recommendation.
Mm-hmm.
On the RC, you are something above, right? Something that you just see from different perspective. So once you identify the problem, then you have to do an analysis, and then you have to recommend. So watch me here and follow my logic here. If the analysis is weak, and you're sitting, you cover the INC, analysis is weak, I can easily bring you back to, where is that arrow that I'm looking for? I can easily drag you back down to NC,
Oh.
right? That's one thing that you should understand. If I see your analysis is weak, I can bring you back from RC, I can bring you back to NC. But if you have the identification, if you have weak analysis and you provide recommendation from C, there is no way to bring you all the way down to NC.
Oh, identify. Okay. Okay. Yeah.
That will be too much. Why? Because you already have something on the highest level. Right? So I don't like your analysis. It's not completed, but you made one step further, recommendation. So that now the most I can bring you back to RC. Make sense?
Makes sense.
So what do I expect here on the financial reporting? But let's talk about this when we come to the financial reporting. Let's focus now on the assurance first. First thing first. So I copy this case and I have it here. So let's start with 2015. You already see this one, correct?
Correct.
So let's go over together and let's see what I'm seeing. This is the case, right? KMET. It's a private company, so private company, that will be the trigger word for us. Own equally with your siblings, Kyle and Kevin, who inherited the company from their father when he passed away 10 years ago. KMET operates two business segments, health operations, so we have two business segments, health operation and real estate leasing. Now, remember from yesterday, with the segment reporting.
Yes.
Right? So every time when you hear business segments, now what we have to we have the template. First, establish, is this actually segment?
Yeah.
Second, if it's a segment, do we have to report it separately? And if we have to report it separately, what we have to disclose? Right? So now we have that in mind. So that's why I want you to start making yourself like a map. If you want to set map. So if the question going that direction, where I'm going, what are the possible scenarios in that case? If the question going that direction, where are the possible scenarios there? So you literally start drawing a map. Are you going to draw it on the wall in the living room or in the Excel spreadsheet? It doesn't really matter. But we are like people who solving the case here. We have murder case. A murder case is the case. We have to find the solution.
Okay.
And you start drawing the map, right? From here, if the question goes this direction, where I'm going, what should I do? Which standards I should use? If the question going that direction, where I'm going, which standards are available there?
Okay.
I want you to be better than artificial intelligence.
Yes.
I'm sorry, that's the way you can, because this is how the artificial intelligence works. It doesn't have the answers, but it has all the possible answers from before. So once I see where the thing's going, I can tell you what's going to happen. I'm just predicting the future based on the past experience. The only fact is that I know everything from the past. I don't forget anything, and I have data from everything. So Kyle studied neuropathic medicine, and now the VP Health Operation. She oversees the product development. Kevin, who was appointed CEO of KMET. So we have health operations. So we have health operations here, and we have a KMET, VP of Health Operations, which is a segment, and KMET is the whole company. He spent his time focusing on the company, other business segment, real estate. So now we know who is who. Kyle studied medicine, health. Kevin, real estate. Leasing, which helps fund human research and development activities. KMET board of directors consists of Kyle, Kevin, and 3 independent directors, lawyers, retired doctors, and fitness instructors, who are friends of the Oysen family. Now, health operation. The late Mr. Olsen was a pioneer of the commercializing of the oil harvest from krill, whatever that's similar to shrimp. The oil which is extracted from the krill by the process patented by KMET can be sold in bulk or further refined into the capsules. So basically, if we have to go further on the managerial accounting, that's probably a joint product. In 2004, KMET produced the first krill oil capsules on the market, called it K-Krill. Currently, K-Krill oil is the company only product, and so the Canadian distributors in capsule form only. Until recently, production was limited due to the manufacturing plant capacity constraints. However, with the plant expansion completed in May 2025, which year? So far, I haven't seen any year, right? We don't know where we are. The production K-Krill increase met the current market demand, but demand continued to grow. Operation details are provided appendix 2. To further increase the production capacity to meet the anticipated sales growth, to create then the possible commercialization of our product, the board of directors has decided to pursue initial public offering. An underwriting firm has agreed to complete the IPO, initial public offering, for December 1st, 2015. Okay, so now we have private company which going to the IPO. Now, obviously, which standards we have to use. We cannot use the accounting standard for the private enterprises anymore. Make sense?
Makes sense.
We need at least 2 or 3 years before we go public to use the International Financial Reporting Standard to comparison purposes. That's for the health. Real estate leasing. The real estate leasing operation consists of lease of commercial real estate purchase over the years. It's now October 20th. Oh, now finally we're somewhere. Okay, that's where we are. October 20th, 2015. Kevin has been looking to exit the company and start his own real estate investment business. Meanwhile, Kyle is interested in the greater leadership role as he wants to position KMET in the leading krill oil manufacturer. In June this year, Kevin incorporated a private company, K-Lease KOL, and become president on that company on November 30th. So this is the future, right? On November 30th, 2015, KMET will sell the real estate leasing business segment to K-Lease for $200 cash payment. And Kyle will take over KMET CEO role from Kevin. The remainder of the purchase price yet to be determined will be due on June 2070, 2 years later. Details regarding corporate structure is provided pending. So you, now, who are you? You are in the meeting, CPA, you, CPA, are in the meeting of Tracy Allen, CFO, the auditor, and the member KMET Finance Department. Tracy has indicated that the current year financial statements and prior year comparative figures have been prepared on the International Financial Reporting Standards in anticipation of the initial public offers. Okay. Unfortunately, the finance department is currently without control. Beautiful, right? On
Yeah.
October 15, which we are now October 20th, on October 15, the previous control accepted position VP Finance and CEO in the chemist new company, Keyless. Although Tracy expects to fulfill Tracy Allen, Tracy to fill the controls position before year end, she's relying on the financial administration team to put the extra effort required to complete the restructuring, ensure the successful IPO, and prepare for the December 31st year-end audit. So we know where the year-end is. So we know where we are. We know where the year-end is. We are October 20th. Year-end is December 31st. On October 15th, this guy accepted the offer, and on November 30th, these two companies were gonna split. Now we have the time frame. So far, no requirements. I don't see anything, only case facts. And so that's extract of the prior financial statement, and the third quarter results are presented appendix 3, although with significant information. Additional information customized to your role is presented on the role package. So now, on the audit, where we are. You are audit manager, right? That's where we are. Question and answer has been engaged by the board to audit the financial statement of KMET for the year ending December 31st. Over the past 5 years, question and answer has maintained a good relation. Q&A, question and answer, that's where question Arnold, sorry. Not question Arnold, that's the insurance company. Has maintained a good relationship with the KMET, usually completed audit by April 30th. Wow, take them 3 months. That's a lot. There has been no significant audit issue that would impact the key financial statements users, which include KeyMet lenders and owners. However, the audit company has become aware of the new imposed by covenants requiring KeyMet to maintain current ratio 1.5 to 1. Okay. Your firm recently learned of KMET Planet IPO, of Planet IPO. As Tracy Allen, KMET CFO, indicated in the meeting, the draft financial statement have been prepared under International Financial Reporting Standards. You met with the engaged partner who said to you, Tracy confidentially expressed concern about the control of sudden departure of Keyless. Shortly after the investment, properly fair value calculation was done for the year-end financial statements. Well, that's now we have to do due diligence, right?
Yeah.
Obvious. So now, I would like you to prepare. So we have to prepare memo. Okay, prepare memo. Discussing. Now, what we have to be in memo? We have to discuss what we have to discuss now. Discussing financial report issue. 1. That's 1, right? And to prepare and to provide. That's 2. provide me with the revised financial statements, which take into account necessary adjustments to your note. So basically, we have to make adjustments. I would also, let's break it. I would also like your thoughts. So here we have to discuss on whether the real estate leasing operation that are being disposed of qualify as a discontinued operation. That's number 3 here, right? Number 3. Please, that's number 4, analyze whether the fraction meets the criteria, but do not make any adjustment for it until I have a chance to discuss the issue with the upper management. So we just have to do analysis. Okay, I recognize that IPO is fast approaching, but for the time being, I would like you to start on the year-end audit plan. So, year-end audit plan. So what does he want about the year-end audit plan? I would like you to begin with the overall look of financial situation of the company. To accomplish this, I suggest you to prepare, so now we have to do this, prepare detailed analytical review of the income statement item. Analysis the key financial ratio compared to the prior year. Following that, I would like to assessment of the overall financial statement risk, including discussion on the impact that the planned approach on your plan approach and materiality. So discussion of the overall risk assessment. What will be our including discuss? So now do we have to discuss a planning approach and materiality? Also, so let's break it more. So let's see, to accomplish, I recognize the year end, I suggest you to prepare. Following that, I'm going to bring it by paragraphs. Also, please provide procedures to address the financial reporting issue you have identified in other risk. So first, financial reporting issue, 1. And the second one is any other significant risk related to financial statement items. Those are 2, right? After the tax provisions are completed by KMA TaxFin, they will be reviewed by specialists. In addition to preparing the audit plan, what was that? Detailed review of income statement. Where is that? The audit plan. Unfortunately, I would like to stay here at audit plan, right? This is the audit plan. No, not this one, in the blue one. Overall look on the financial situation of the company. So we have to do the overall look of the financial statement. And the suggestions are to prepare detailed analytical view of the income statement and analysis of financial ratio compared. Okay. In addition to preparing the audit plan, so this is all related to audit plan, I would like you to discuss impact. So discuss impact on audit reports on the accounting errors. So now for that reason here, this thing we cannot answer it before actually do the accounting errors, right? This is the only thing that so far we cannot answer without doing that, fixing those errors. Please also prepare a memo. So now it seems like now we have to prepare another memo which describe auditors' responsibility related to IPO. First, can you see it? This is one thing, and the next thing, a related prospectus. In addition to the common appendixes, information provided by assurance and are relevant for years. Okay, those are the assessment opportunities. So now the question is, did we get everything? At this point, we have to go to the case and start chasing what we get and what we didn't get. Let's share this and see if we're on the right track first. Core financial statement, that's financial reporting. We're gonna skip assurance marking guide, KMET. So the financial reporting, we're gonna skip it for now. Right. So next assessment of opportunity 2 is the opportunity to candidate discuss that financial reporting again. Inventory consignment issue, we're gonna leave it. Next one is the financial report. The candidate discuss research and development issue. Okay. That's 2. That's 3. Next one, still financial reporting, assessment opportunity 4. You see in the very first exams, they were testing only and only financial reporting. Somewhere around 2018, 2019, they start pushing financial managerial accounting in the first part. So we're going here to this and blah, 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 blah. Let's move on from this. Let's move on for this. 5 is still financial reporting. Those are the adjustments that we have to make to financial statements. Now let's see what else we can get from here. Assurance. Now we're on the assurance. First assurance is, right? The 5 is here, financial reporting assurance. Assurance. First assurance. Candidate performed detailed analytical review of the income statement as part of the audit plan. We already find out that we have to do that, right? So now, they're quoting the standard, as you can see. So what we have to assess the assessment procedure, including inquiry the management analytical procedure, observing the inspection below have presented preliminary analytical analysis in the means of identify the item that need further analysis. So which are the items that we're gonna further analyze? The one with the variances, right?
Yeah.
What will be the key point here for the variances? Beat me, I don't know, but obviously anything significant. Now we're going to the point what the significant is, right? So you can see here, 34, 37%, 24%. 24% is still significant, right? So for that reason, we're discussing those revenue, income, other income, cost, sales, and amortization, and we're getting only thing from when the case is explicitly communicated with us that we have to extract those one from financial situation of the company, prepare detailed analytical review, income statement items. It doesn't say anything about the balance sheet. So we stay with the income statement. As you can see, only income statement items. Selling, research and development, fair value on investment, and financial costs. So those are the initial comments. Can you do it this way in the table? Now, as you can see now on the today's answers, 2024, 2023, 2022, do we kind of stay away from those tables, which were used okay with early years? Because when you put it this in a statement on this situation, will be a little bit kind of tricky for the marker to say, is this actually analysis? Because this is what you have to do. You understand? The numbers are already given to you. The numbers are already given to you. I'm gonna give you I'm gonna give you identification because you're taking the numbers, you identify the number from the case and put it in your work. But in order to get something more, you have to give me something more.
Yeah.
Right? So if you come up with the variance, sure, I'm gonna give you now. If you come up with the percentage on the variance, that's even more useful for me. Make sense? Because the dollar amount, it doesn't talk to me too much sometimes. Yeah, it can impress me or can depress me, but it doesn't tell me too much. Percentage is more meaningful in those type of analysis. The other thing, once now you're coming with a comment, where the comment should be. Well, you just drag it from the case again.
Okay.
Right? You don't have to, how can I say, you don't have to.
Do too much investigation. You just take the thing.
Yeah. So as you can see, line of credit increase or debit financing of the new plant may account for increase. Further substantive work required.
Yeah.
Further information needed. Further substantive test if required. Further analytics required. So you're saying what is it, or you're expressing some kind of what will be the concerns with the increase, any possible increases, and then you cover yourself with the further work, further analysis required. 10,000 related to the self-investment property, which is explain the plan. And if you can explain it easily, explain it. If you not, further stuff is required. That's with that. We're done with the income statement. Now, the next thing, the next assessment opportunity comes from the financial ratios. Right? So now, since we identified in the case, remember, we identified those two in the case. Can you do it in one section? Yes, you can. Right? Because this is, we suggest to prepare detailed analytic review of the income statement, comma, as well as an analysis of the key financial ratio compared to the prior year. Right? Most likely, if I'm writing the case, I'm going to do it in the same section. Am I going to get a mark deduction if I do it in the same section? Absolutely not. The marker taking whatever he can take from your case and apply to the marking guide. Where is it in the document? It doesn't matter. You can make this overview at the end of the paper. Right?
Yeah.
Pass the second time pass. Let's get you pass, and then go for the third time and try to test. Let's try to test the marker. Get some section, put it at the end. The one who's on the end, put it in the beginning. Financial reporting, put it in the middle, and let's see if you're gonna get the marks. Right? We can make those tests, but you're gonna get your marks.
Okay.
Where is it on the paper? It doesn't matter. It matters, do you have it or not? So now what we're doing here, now listen to this. This is again, is a key interesting. Before adjustments, ratio is this much. Right? Which below the imposed bank covenants. In addition, after September, accounting adjustments, now current ratio is only, so before adjustments and after adjustments. So that's why for those key financial ratios, we're gonna need the financial reporting. To solve the reporting. So there's here in the early years, you can see there's a relation between one and another. Why September 30th? Or maybe there's something happened. I can't remember. Did something happen on the case on September 30th? Why they call it September 30th? Where did we see September 30th? I see October 20th. Or maybe there might be something on the appendix, which is related to that particular thing. Yes, yes. On the financial statements, do we have a draft financial statement that's September 30th? That's appendix 3.
Yes.
And
Yes.
then we have December 31st, 2024, 2014, September 30th, which is preliminary statement before, maybe they need that one for the IPO. Or maybe, no IPO. They probably need this one to split the companies. Right? Because the company has to split, what was the splitting point on the companies? They wanted to do that on November 30th. Right? Okay, so now we know why is this September 30th so important. So once we do that, now we have to comment on those. Which one you're gonna choose when they say key financial, because the key here is compare the key financial ratios. For how you can come up with this idea of those particular key financial ratios. That will be another question, right? Let me see if they give you anything on the case. Revenue, finished goods, raw material, work in process, blah, blah, blah. Financial ratio balance. No, they don't give you anything. So you have to come up with those ones. At least I don't see anything. Or maybe I should open it on another Word PDF document. I don't know if that's going to work though. Can you open the case in two PDF documents?
The case?
Yeah.
Yes.
Is it possible to do that?
In PDF? Yes.
Yeah, two documents, the same case.
Word
Open.
document or PDF, Adobe?
No. To have two documents next to each other on the same case.
Yes, you can have two screens, yeah, while at least you're doing the case.
No. My thing is to open the same PDF document twice.
No.
No.
No. I
No.
know. I want also to do that because sometimes the case is too long on the screen.
Right.
Yeah.
No, it doesn't give me. Only once. So where we are, page, which page we are here? It doesn't even tell us which page we are. No, tells us, page 83. Okay, those pages are like pretty much the same. 83. Where is the case? Exhibit. Let's go to this exhibit and see. Do we have any financial? Here we go. Oh, we're not that far away. So we have the cash. We count accounts receivables, tax receivables, current assets, non-current assets, liabilities, current portion, but they're not giving us any ratios, so we have to come up with those ratios. Right? And then we have those statements of 9 month ended September 30th for the segment information. That's why we can they come up with this September 30th ratios. Okay. So let's see which ratio they're using. Page 83. They're going with the current ratio, obviously. They're in accounts receivables. Are you comfortable with calculating those ones?
Accounts receivables, yeah.
Days in inventory.
Yes.
You're not gonna get those two if you don't get accounts receivables turnover and inventory turnover.
Yeah, because they align with each other.
Yes. You're getting 365 divided by accounts receivables turnover. And then you days in inventory, getting again 365 divided by inventory turnover. But the inventory turnover, you're getting it with what was it? Accounts receivables will be all the sales on credit divided by the average. No, beginning balance. How was it? Beginning balance, ending balance divided by total sales, something like that. And then there's an inventory. You're getting the inventory average versus. Oh my God. Let me pull the formulas. Just a second. I have it here on chapter 4. Not this one. Material accounting. Not this one. Just give me a second. I'll pull those formulas. Are you familiar with those formulas?
Formulas?
Yeah. How to
Yes.
get one versus the other. Here we go. You can see my screen, right?
Mm-hmm.
So the accounts receivables, you're getting credit sales divided by average receivables. And then we're going to 365 divided by accounts receivable turnover.
Hmm.
On the inventory, cost of goods sold divided by the average inventory. And then you're going to have 365 divided by the inventory turnover. So days in sales inventory, you have to get the inventory turnover.
Turnover first.
Right. And the days in average collection period, you still need to get accounts receivables turnover.
Okay.
All right. So what's the key here? Once you comment on the ratio, which one is better, higher or lower?
For accounts receivable, you want it to be lower because if
For-
it's higher, it means
Right.
like you have a lot of collections issues.
Watch this. Watch this. Here the number starts with 11 and go to 12. Now in days transfer, actually you wanted higher number.
Yes. In days,
Look, watch this.
how many
Low number in accounts receivable
in days?
turnover, it's going to give you more days.
Mm-hmm.
High number is going to give you less days. Can you see it?
Yes.
So in here you want high number.
Mm-hmm.
On the inventory, again, you need high number. Because high number give you less days. Yes. Low number give you more days.
Mm-hmm.
You don't want your inventory to sit in your inventory. You want it out.
Just for a long time, yeah.
Right. Okay. So let's forget about this one. Let's go to the answer again. Okay, so current ratio days in inventory in accounts receivables, days of inventory. Basically, those improve. So now we have to make a comment, but those are initial comments, right? Not analysis, just comments. Then we're going to have debt to equity and gross margin. Now, when it comes to the debt to equity, when it comes to that particular thing, because the debt to equity is good ratio, but by itself doesn't give you too much. I'll explain why. Because watch this. Just a second. Let me share the screen. Let's go back to, what is it? This thing. Now we have here debt to equity, which is the financial leverage solvency ratio, debt to equity, right?
Mm-hmm.
which is net debt versus the shareholders' equity. But also we have this interest coverage ratio. And the interest coverage ratio is how many times you earn the interest expenses. In other terms is how many times from your net income before income tax and depreciation and amortization, how many times you can pay your interest expenses.
Yes.
Make sense?
Yeah,
So, so for this company, for example, this company, watch this, the debt to equity, debt goes up from 42, 64, 59, but the interest on ratio also goes up. So in that case, do I have to worry about my debt?
Yes.
Think again. Before you say yes or no, I want you to think. So watch again. I'm buying one apartment, but I'm paying 1% interest. My mortgage is $500,000, but I'm paying 1% interest. I'm buying second apartment. Mortgage is another $500,000, but my interest is 1%. And my income, so how much is my annual cost for my loan? $5,000. 1% is $5,000,
Yeah.
right? But my income is $100,000. Do I have to worry about my financial cost?
No,
No,
I shouldn't. Because so if it's higher, it means that I can easily cover it with no problems. But
right,
if it's going lower, it means that I'm having trouble before even covering EBITDA to
right,
even cover my interest expense.
right. Make sense?
Makes sense.
So if I see that this interest coverage ratio goes up, when my debt goes up, I don't have to worry because I have something that generates me income.
Yeah.
Borrowing money is cheaper for me.
Hmm.
So I can take even more debt. But if I see this ratio start going down, then I have to restructure my company debt to equity to respond to the increase the cost of the financial cost.
Yeah.
Okay, so let's keep going. The case here. We're done with those ratios. We're done with these things.
Hmm.
There's some explanation. I want you to understand those ratios. I don't know if they're going to throw it again, but they might. So make a appropriate logical analysis. Now the next one provides overall financial statement risk assessment as part of the audit plan. This one we saw it coming. Although it has previous audit clients, no significant audit issue in the past, the company drastically changed. So what we chasing first? We're chasing, is there anything changed? So what we're trying to find out here. Formula. What was the formula? Inherent risk time internal control risk time audit risk equal to, what was that? Overall risk?
Yeah.
Right. So we have to assess how we're going to do the audit plan. Basically, the audit plan comes from the what changes, because we want to have the overall risk to be low. If the inherent risk is high, control risk is high, the only way we can keep the overall risk low is to lower the audit risk. Make sense?
Makes sense.
You know that formula, right?
Mm-hmm.
So now we start chasing what's happening here. First, significant factor affecting overall audit strategy. Company has history. Now we're going to the inherent risk. Company has history operating losses that have been particularly financed in those leases. Important to consider what will be the impact on the company ability, blah, blah, blah. I mean, like, can you come up with those ideas?
Mhm.
This basically doing overview. What's happening in the company?
Yeah, these are easy.
Easy, but here is the catch. You still, I think, the overview financial statement require financial statement adjustments. So now, in order to talk about these adjustments, we have to do the financial reporting, where that wasn't the case on the case yesterday.
So this case, are we saying like, oh
The
yeah,
case,
the other case we didn't, Tasty
no,
Meal Basket did not have an audit plan.
right?
But in here we have an audit plan. So because we have to calculate materiality, we have to do the financial reporting
Yes, yes,
and incorporate that.
right. But those were the early cases,
Mhm.
right? What are the chances now they to go that direction? But we have to be prepared for everything. Now, the overall financial statement assessment, now the factor which increased the risk. Departure of the controller, incoming IPO, new lender covenants requirements, bank change the requirements, upcoming sale of lease operations, this discovery of many accounting errors, sales of the key lease, which is the large and complex transaction. Can you extract all of them from the case?
Yes.
Yes. Now, what you have to do, identify it and tell me why this is a problem and how this gonna affect the risk.
Mm.
That's where we are.
Mhm.
Identify, discuss, show me the impact. Identify, discuss, show me the impact. And that's how you can do with one sentence. Departure of control. No one is going to doing the the job now, and the financial staff is filling it, which increase the risk of error. Upcoming IPO in the Reliance financial statement with a larger, more diverse group of sales, which increase the bias management, has to want to show better results in order to attract potential investors. What they missing here, which also increase risk for errors and risk for missing. Actually, they say risk increasing bias management increases the bias management, but they're not showing which risky. So you can come up with something. You can even add something here from yourself. There's still room for something else to add. The new lender covenant requirements, which increase the potential risk of bias to manipulate the results. And incoming sales of the lease opportunity, which increase in all those things. Now, what's the next one? The next one is factor to decrease the risk below. So what can we do? We to decrease that risk. And high knowledge of expertise, the key facts. That doesn't decrease. Make sense?
Yeah, it makes sense.
Right. High knowledge and the expertise of the key facts is a statement. But this is the factor that decrease factor. No, the factor high knowledge. Yeah, I can see it as a factor, but the key is, can you give me examples how we can do it? Make sense?
Makes sense.
So now what I want you to do, identify the factor, but give me key. Make it easy for me.
Tell me why it's gonna be a problem.
Right.
Okay.
No. You already told me this is a problem, right? You already
Mhm.
told me this is a problem. You're telling me that which the factor will decrease the risk. High knowledge and expertise
To
are the key stuff.
increase.
How can I get that high knowledge? Additional training on the people. Make sure that they follow the exact procedures. One person to put authorization on any transactions and anything like that.
Mhm.
The next one will be the positive history with the owners and audit with no significant issue in the past years. That's a factor that decrease risk. And ethical owners who require high ethics from the business partners. Okay, So do you understand what they're doing?
Yeah. No, I totally see it.
No? So what they're doing is they're showing what changed in the company and which are the factors that increase the risk,
And then which are the factors that would
who
decrease the
who
risk?
who countered that increased the risk.
Mhm.
So
Oh, so you also have to identify the person.
right,
Okay.
makes sense.
Oh, makes sense. Okay, so we've got three elements here.
So for the overall risk assessment, we shouldn't be focused only on the negative. We should focus. We should be able to see what is the positive that decreases the risk. And now we come up with, once we have the factor increasing the risk, factor decreasing the risk, overall financial statement risk is assessed high due to the significant financial statements errors. New imposed bank covenants and increased reliance statement of result of the incoming IPO. So even though we have factors who decrease the risk, those are not enough to over counter the increased risk.
Okay.
Right? So now from the standards, watch this, from the standards, what I want you to see is from the standards, we're using the standards to significant factor affecting overall audit strategy and overall financial statement risk assessment. Is this anyway in the requirements that we can see this? Let me go back to the requirements and try. Financial statement issue. Thoughts whether the real estate leasing operation data big that is qualified assessment, financial statement risk, and client approach materials. Income statement are key financial statements. Okay, so watch this. Now here we're chasing two things. Significant factor affecting overall audit strategy, one, and next one is overall financial risk assessment. What's gonna trigger us for what's gonna make us to do those two things? Following, so the first thing we prepared detailed analytical view of the income statement, analytical of key financial ratio compared to the prior year. We did that. So you see, we're doing exactly what they want. So next thing, assess of the overall financial statement risk. Including discussion in your planet approach and materiality, we're not there yet, right? Now, the assessment of the overall financial statement risk. It's not clear, right? So what's gonna trigger us to do all those two sections? That's my question now. Is it from the standard? Overall financial statement risk, that's where we are. Is previously audit client significant audit, so there will additional users of the audit statement as a result those changes, okay. Significant factor affecting overall audit strategy. So probably that is related to the standard. Now I want you to check the standard, 300 and 350, and is there anything above in the beginning of the standard that says that those are the things that you have to consider when you're doing financial statement risk assessment as part of the audit plan for the financial statement audit. Make sense?
Makes sense.
So next time when you see something like a financial risk assessment as part of the audit plan, you to know that you have to do significant factor affecting overall audit strategy and overall financial statement risk assessment. the C here, the C is gonna come and C plus is gonna come from this paragraph.
Overall.
Yes.
Mhm.
As next one, the candidate discuss appropriate audit approach and materiality as part of the audit approach. You already know the audit approach. Overall risk assessed is high. Now, once you assess that he increased the substantive, so what will be the audit result of the IPO? Significant change in accounting balances from the previous year and current breach of the new control environment. Now we start. Positive points, negative points. Overall control risk is high. Then we go to the materiality. Where is the audit approach and materiality? Where is the audit approach?
The other approach, pretty much, we're just gonna speak on controls, the control environment, but it also influences how we're gonna set our performance materiality and materiality on its own, based on the
That's,
user
yeah.
and based on the errors, because performance materiality is like we're saying.
Yeah, but here for the audit approach, I understand we're doing the control environment, but I was expect here for the audit approach to be substantive or combined,
Combined, yeah.
right? Those are the audit approaches here. When I see control environment, so once you do the control environment, that's fine. Positive, negative points. Comment, make a suggestion on the overall control risk, but then come up with the audit approach. Make sense? Because the audit approach will be, again, you have options. Is it going to be substantive? Is it going to be now here? The audit approach could rely on the control available, but unlikely. Let's see what they're coming here. Unlikely, since there's a no controller in place. In addition, inventory research and dependent procedures. So substantive approach will require for those areas. Okay, this is the conclusion here. But if are you, what I'm going, no, actually, do you have to comment on the appropriate of the options of the approach? In this case, no, because your person already know. You're reporting to the auditor. You're not reporting for somebody outside of the company. So for that reason, you don't have to explain what the substantive approach is and what's the other one, combined approaches. Make sense?
Makes sense.
So on the materiality, professional judgment required calculating materiality. Percentage is often applied to the now listen to that. That's what I expected to see in the previous, because here you're explaining what materiality is and how we come up with ideas about materiality. I would expect it to see here what's the two approaches that they have available. And when you tell me what are the control problems here and control environment, then and you say me that risk is high, for that reason choose this approach.
Okay.
Right? Now the professional judgment is required to calculate the materiality percentage, often applied to benchmarks such as profit before taxes as a starting point to determine the materiality of financial statements as a whole. Because KMate has history of losses, profit before taxes will not be the best benchmark to determine materiality. Include the gross profit or total revenue. Since September 31st, we will issue those and analyze them, estimating year-end amount, proposed calculating materiality. KMate is currently in a growth model. It has high demand of the health product. As a result, financial statement will be more, therefore, okay, you come up with the materiality here, such as consider using percentage of the revenue, such as 1% of the materiality. The significant high percentage of the gross profit may also reasonable, so you come up with some else, 5%. Is it always 5% when you're going with the gross profit? Sometimes I'm seeing 4%.
Sometimes it's usually just it's usually just 5% because it's rare. Materiality is usually just gonna be 5. It's rare for it to change.
Right.
But PM is usually where you see a change that you can be today. It can be you can put it to a lower end. In another
Yeah.
case, you put it to a higher end.
On the performance, yes. Performance, materiality, yes. But the other thing is, watch this answer now. Where is the area of the improvement? And the area of improvement here will be you to split it by 2 sections. Actually, 3 sections. First section will be this, explaining about the materiality, right? That will be the first section. Then you come up with the performance materiality. No, sorry, overall materiality. Because those 2 are showing you how to calculate the overall materiality, right? And if we reduce materiality to the level below the prior materiality, we have additional audit work and opening balances. Now we're gonna go now in the performance materiality. You know what's the difference between overall materiality and performance materiality, right?
Yeah.
One is for the outsiders, the other one is for the auditors. Due to the increased reliance on financials by lenders and lower materiality appropriate to meet the needs of the preliminary materiality is recommended. This will be monitor potential adjustments to the audit. Potential performance materiality will be the lower, allow possible undetected misstatements, 60% materiality, and therefore 79,000. So anything, if the mistake below 79,000, I'm okay to send the reports. But if their mistake more than 132, you might change your opinion of should they invest or not. Okay, this one done. Next one. Now, next one, the candidate recommend appropriate audit procedures as part of the audit plan. Did we get those audit procedures?
Yes, while you're reading the case.
Right. Provide procedure to address any financial reporting issue you have identified and other significant risks. So first, we're going to start with all the issue that we identified. But here, yesterday, did you see yesterday how everything is done in the paragraph sections?
Yes.
Where here is on the writing side. They also valuation accuracy, valuation existence. You can use these old cases in terms of understanding what you're chasing and what will be the proper structure, and then move to the paragraph way of answering. Intangible asset, existence, completeness, valuation, accuracy.
Well, but it's possible, right? When you're reading the case, that you can even start off with the procedure first, right? In your role.
Yeah, you can start with the procedures, and you start with the But listen this. Why? If you start with the procedures, you have to go backwards. That will be the logical way, because if you do those procedures, you're gonna make sure that this risk, we're chasing the risk of overstatement and understatement, which is related to valuation and accuracy.
Okay.
But make sure that you're following the same thing, or you're getting the procedures. Which risk you chasing with those procedures, and what's the assertion? This case is actually interesting because you have everything. But it's given on the kind of kind of easy to see format, but if you do it this way, are you gonna get pass in this reality? You should be able to do it.
Mm-hmm.
Okay, so you have all the assertions here, all the like terminology, valuation, accuracy, existence, completeness. Property, plant, and equipment. Let's see what's the other thing that they come in. Product revenue, accounts receivables.
I need at least 5, right?
Yes.
Okay.
Right. But listen this. Hold on a second now, because there's a catch here. Right?
Okay.
Right. What is the catch? The catch is where is the word document? Let me see here. The catch is that provide procedures. We have to provide procedure to address any financial reporting issue. You have procedures to address any financial reporting issue you have identified, right? So now, if you identify 4 issues and you give me the procedure for 3 of them, it doesn't make sense. Make sense?
Makes sense.
When you say 5, that means from the everything that identify with the financial reporting issues, you should have procedures.
Mm-hmm.
And from the other, if the other are 5, you can give me 3, I'm okay. That probably the marking guide will be. Did she provide procedures for everything that she identified as a financial reporting issue? And did she get another 3 out of 5 from the other one? Okay, let's go back to the case. So how many things? They going concern, financial cost, debt, selling general administrative expenses, those are others, obviously. Investment property, lease revenue, probably that's others. Product revenue, accounts receivables, we haven't checked those ones, so might be others. And then we have 1, 2, 3, 4, 5, 6, 7, 8, 9.
Mm-hmm.
From those 9, I would like to see at least 7.
7. Okay.
Yeah. Can you come up with all those ideas? Though that will be the question. If you're on the exam condition, can you come up with those where you should look for? And once you see something, something that now it's going to come to the experience of solving the cases.
Mm-hmm.
Can you come up with the going concern issue? Right? And can you come up with the finance cost and debt? Because we already saw that debt to equity ratio goes up. Can we see any justification that financial cost is higher? Most likely on the balance sheet somewhere.
Yeah.
Or not balance sheet, on the income statement, sorry. And from the balance sheet, we're going to see how much is our outstanding loan. If the loan goes up and the financial cost goes up.
Okay. Yes, that's true.
Right, but you see, now comes to the point. You have to, once you read the case, all those things to start coming in your mind. I have to check this, I have to check this, I have to see this, I have to see this. Again, it's coming to the map. Right now, what we're doing, we're trying to map and put it on the different scenarios. If you have this kind of situation in the company, in overall, where that's going to trigger it, where you should look how you should comment. Let's go to the next one. Discuss audit impact in accounting errors identified. So did we get this one?
So,
Impact on the financial. Yes, we got this one. It's now we're getting close to the.
this area is a bit of a weakness for me because, like, whenever it comes to, I find it a bit complicated on the approach.
This one
What-
we'll discuss the audit report on the finding accounting errors.
Mhm.
Let's see what they come up with. Again, everything's gonna come from experience. So, as detailed above, there's a number of accounting errors and misstatement. Obviously, that's continuation, right? We're building up on those accounting errors, and we still throwing out that we're gonna have IPO, which is gonna affect all the our audit opinion and the investors' opinion, everything. We just keep throwing those one, and we're saying that if those not corrected, they will impact our material misstatement of financial statements.
But
So,
if corrected, we can
right.
just say.
So what's the summary of the auditors? As detailed previously, the unadjusted error found in the review of the draft financial statement amounted of reduction of net income of that month, which exceed preliminary materiality. Now you see, now we link it mistake that possibly have on the financial statement with our materiality.
Mhm.
We're not changing anything. Management need to like a good auditors, we're gonna wash our hands with the management.
And say, okay, do the changes. And if you do
Yes,
the changes, then we can issue a better opinion. But if
right,
you do not, we are not going to issue an opinion. And yeah.
right, right. So if we were engaged to discuss the comfort letter to the underwriters, discuss later in this memo, we will need to ensure that any errors are correct, and we need to review offering document to ensure that the misrepresentation before consenting and issuing comfort letter. Impact on the prior financial statements, error in on the previous audit opinion. Subsequent to 2014, our opinion was released. We have discovered significant errors related to overstatement of revenue and overstatement of the cost of sales income. Since the errors might have resulted in change of the audit opinion, in charge, our responsibility is to first discuss the matter with the management. Okay, so we're talking about something that was found subsequent to our 2014, so in 2015, right?
Mm-hmm.
So probably this one we have to go to the case and actually start digging where exactly this one come from. Let's go and check where possibly this one comes from. Assurance additional information, health operation. That's not the one. Assurance, that's the only thing that we have the insurance. We have the operational oversight, health operation cow review, and the control environment budget the next. The company has accounting system, inventory fixed, over the past couple of years has been using the new production system interface with these things. During 2015, however, the system was abandoned. As a result, abandonment inventory costs qualified quantities are currently tracked on detailed spreadsheet maintained and monitored for production management. Every quarter, financial analysis, research development costs are tracked in the project management system. Costs are manually recorded in general ledger, cost center. The control prepare monthly. There's nothing for 2014 here, correct? I don't see
Correct.
at least I don't see anything related to 2014. From where did they come up with this 2014 revenue?
I think there was an issue in the
Here we go.
2014 situation. Yeah, I remember this case. It had a prior issue in
So
prior
During the
And then-
first 9 months, 2015, company sold bottles. On January of 2014, KMA started. Oh, no, that's January. No, that's not. What are you saying, sorry?
So for that case, I remember very well. What happened is that there was a 2014 error in revenue. Something happened. So
Uh,
that 2014 error was now impacting the current audit that they had to do. There was a link between, I think that's what happened. Um,
Manufacturing product primary crew. Okay. Bottom window, that's 2014 here, 2014. Cost of the balances, none. No, there's nothing here. Accumulated depreciation, net carrying balances. 2014 estimated life. Okay, if okay, so like I don't see it, but here, but yeah, if that's related to that one, then that answer makes sense,
yeah,
right?
I'll do the cases, those two cases this week, and then I'll tell you on Saturday, next week Saturday, what
Okay,
the
where
yeah,
exactly this one comes from,
yeah,
right?
exactly. Yeah.
Because this is subsequent to our after the reports, right? There's
Mhm.
discover significant errors. Our statement of the cost. You know what? The other thing that I can do is easiest one is copy this and to search for this amount particular and see if this amount is gonna come from somewhere. Let's see if something comes over. Ah, here we go. But that was sales overstated with 3715. Can you see it?
Yeah. Yeah, sales were overstated
Right.
prior
That's
year.
right. And here, impact, that's exactly where we're going. On the sales are overstated. Overstatement of cost of sales of the and net income impact that one. So since the error might have resulted changes in audit opinion, our responsibility first to discuss the matter management of the board. We will then require financial statement amended to determine how the management will amend the statement. We'll then need audit to audit the amended and okay. Other matters, okay. This is related to the, but you see, we still have to show you still have to show the accounting standards, the audit standard that you're using.
Mm-hmm.
Going concern issue, losses have incurred. So now this going concern here, right? Nobody is no longer going concern, need to present financial statements. So this going concern, how they say, losses have been incurred in the past 2 years, and the lease operation have been funding the research and development activities in the health operation. There have some signs of the potential going concern issue with a company within the company, and there are follow losses, valuation of the debt covenants, loss of the key employees, and increase of the bank indebtedness. On the other hand, the company has increased production and demand to increase as well as that could be significant. So basically, you try to avoid here the that going concern, but look at this at the end of the day. If we decide that the use of going concern assumptions is not appropriate and management does not adjust the financial statement, we will express adverse opinion. So that's our audit impact on the accounting errors identify. That's how it's going to impact our audit. So where it's going to hit us in our final report.
When I was talking about whether we should issue and what kind of opinion we should issue based on the findings we've mentioned.
So basically, watch this. We're not saying that we're going to do this. We're saying if you don't do this, then we'll do this. Do you see the catch here? Basically, again, I'm not the bad guy, right? I'm not saying this because I'm a bad person. I'm saying this because you didn't do this.
Yeah.
So I'm on the stage to give the qualified opinion. That's totally fine. But if you don't do this and this and this and this, I'm gonna give you an adverse opinion. And please don't blame me. You're the one who didn't do it. So because if we decide that we use the going concern assumption is not appropriate and the management does not adjust the financial statement, then we will express adverse opinion. So you're saying you're having problem with this, huh?
So my thing is like, okay, so the first, just to be clear on how we approach this one, is that first you're gonna look at the amount of errors you have, right? And
Right,
see whether it is above PM,
right,
because if it's above PM, then it needs to be adjusted, right?
right,
And then you're gonna say, okay, based on the errors I've calculated and seen, this is my approach on my personal audit opinion, right?
right,
And see and explain all the opinions and see like what's going to happen under the circumstances of each opinion.
right.
And then afterwards, now does going concern always come in when there's an issue with your opinion? That's where my issue.
No, I won't say. I won't say
Okay,
that.
so what triggered the going concern issue
In
here?
in this
That's
particular company, so
yeah,
let's that this in this particular company, I would say the going concern comes from where is it? Where we can see this from here. Do you see it?
from the fact that the business has been making losses.
Yes.
So that is always a trigger for the going concern.
Well, you know the rules. Two years in a row generating losses.
That's questionable.
Yeah.
Okay, maybe because also in the real life of accounting, it's not always like that. Because
Yeah.
I worked on a certain audit back in Deloitte, right?
Right.
It was an audit. It was a new company,
Right.
but the going concern, because like our when we were determining performance, the PM and the materiality, it wasn't based on how much they were making. It was based on the company's assets, right? What they had sitting as assets. Because it was still new and it was still growing, we were able to say, okay, despite it making a loss, we are 100% sure in the future it's going to be making a profit.
Correct. But this is also part of the going concern. So you
Because we're
take because you know that this is a problem. However, you convince the other people that this is not a problem. Make sense?
makes sense.
So the same thing here. They're not saying that there's a going concern, right? But they discussing the going concern. Why? Because 2 years in a row you showing me losses. Now I have to tell you that so losses have been incurred. However, there are some signs of potential going concern issue with the company, and there so the losses have been incurred in the past year, and the lease operations have been funding research and development activities. So those are the on the other hand, but watch this. On the other hand, company increased the production, demand increase, resulting higher revenue. This could be a sign that the company is still a going concern. As previously discussed, we will have to perform audit procedure to do this, so confirm whether or not we think the company is in going concern. We will first need to decide whether the materiality in uncertainty exists, and if we decide that there is a materiality uncertainty, adequate disclosure will have to be made to the financial statements. So again, we are the auditor. We as an auditor, we're not saying that it's this company have a problem, but we are concerned with this going concern.
Okay.
Right? We're just covering our back here. That's all. That's all we're doing. We're not saying that company is going to disappear. No, we're trying to find the signs that company actually is going to stay. But there's a risks. Which are the risk? Losses, valuation, debt covenants. If the bank decides I'm imposing 1.5 to 1, and then suddenly you're not, and I see you're not meeting that one, 1.1. What you gonna do?
I'm gonna say that there's no way it can continue to operate because it cannot meet its financial obligations that it owes.
Right. You're losing key employees.
Yeah.
Your bank loans going up. Right.
Yeah.
I mean, like even if I'm super optimistic for your company and I
I
want to see the bright future.
Even if I'm seeing all those things, I know definitely it's a red flag. There's
Right.
something not right. Yeah.
Right. So in that case, do I have to discuss going concern?
Yes, definitely. You have
Yeah.
every right to
Yeah.
say yes.
All right. That's with the and again, I'm not saying that I'm not going to issue unqualified opinion. I'm saying that I need those things to be fixed. You to convince me that everything is fine and adjust the financial statements. But if you don't do that, I'm going to give you this adverse opinion.
Fair enough.
Right. And the last one is the filing.
Mm-hmm.
What was that filing? What was the audit? Prepare a memo describing only responsible prepared to the IPO and the related procedures, right?
Mm-hmm.
So this initial public offering will require the submitting in term financial thing. And this will be something very specific, which probably you know, right? Have you done this
Yes,
before?
I've done an IPO before,
Okay.
but funny thing, it didn't require 3 years.
Well, in reality, it's always a little bit more
Different, yeah.
different.
Funny thing, actually, what happened is that that company, they refused the quarterly. They did like a 9-month audit. They refused it, and SEC refused it and said go do a review engagement. Which was very weird. We didn't understand. And
Right.
we were like, we spent time on this. We hadn't contacted SEC. We just went to SEC with the filings, everything done.
Right.
And they said, no. If it's 9 months, you're not going to give us a 9-month audit. You're going to give us a review engagement. And then we had to redo the work because we had to now do it based on review engagement procedures only.
Right. Crazy. That's crazy. That doesn't make sense.
It doesn't make sense at all.
Right. But that's reality now, right?
Yeah.
That's reality. What can you do? Shit. So this is some procedure that we perform. Reading the prospectum, perform review procedures. If there's a pro forma financial statement, if there's a promotion, we would verify historical. So basically, those are memorization a little bit. You have to be comfortable with this. So you have to have it in your mind. So here for the report prospectus and responsibility for the audit team will be subject. So we will need a separate engagement with the company. So you're saying what I can do, why I can do it, and what will be the procedures that we will need to perform in the future if they're going with this one. And the reporting the requirements for the since IPO investors were making their decision investments based on the September 31st and December 31st 24 financial statement, it's important that the management include the subsequent event note, interim financial statements detailing the sale of the K-lease.
Discontinued operations.
This case is, how can I say, it's not that bad.
Yeah,
You can easily identify all the
a
assessment
lot of
opportunities,
things.
right?
Mm-hmm.
Assessment opportunities is right here on the Word document, not on the Word document for me, but in the requirements. And which now see how CPA evolving, because before those requirements coming from no, they always comes from the assurance requirements. There's nothing comes from the case, because this is the common background information.
Mm-hmm.
And then you're going to your euro, and from euro you're extracting everything that you need to do in order to get us.
Yeah.
If you ever have to recommend how to improve the current ratio, right? How to improve the current ratio? Remember, if the ratio is more than 1, use the cash to pay the accounts payable. You're going to improve the ratio. But if the ratio is below 1, don't ever recommend to pay current liability with cash, because that's going to make it worse. Make sense?
Makes sense.
Play with the numbers and you're going to see the effect. Just remember, more than 1, easily pay with available cash, pay accounts payable, you're going to improve the ratio. But if it's below 1, that's going to kill you.
Mm-hmm.
So in this case, if the ratio is on the stage where they're saying is 187 or whatever it is, you can easily recommend, okay, if that's how small the difference is, you can easily use the available cash, if there's any, to pay the current liability, to reduce the current liability. What was the ratio here? They come up with the ratio.
Okay.
178 went to 127. Right, the current ratio is 144. Let's check if they have cash. They have cash.
And they can use cash to be paying.
Yeah, the current liability. And you're going to improve the ratio. Believe it or not. Crazy. But look at the overdraft that they have. They have ginormous overdraft. And then accounts payable, not much. It's only less than $100,000 go up. Long-term debt goes with 1 million, not 1 million, but 800,000. Well, if you see company like this, you'll be a little bit concerned, unless they don't show you that they're actually expecting to improve in the future. But they have 5 million investment, right? It's tricky. 5 million investment.
Interesting.
Your investment is like a half of your long-term debt.
Yeah. So why don't you just like
Yeah.
cut it down?
Yeah.
But anyways.
And you see the property, plant, and equipment actually going up.
And in a case like this, but hold on.
Yes.
In a case like this, my question is like, when we usually hear something about to do with properties, like because it was a leasing company, it also had leases, right?
Right.
Though we mentioned we were getting rid of it. Okay, so now that makes sense why the at the end of the day, an investor is now more concerned about your profits rather than your assets, because they're getting rid of the leasing side company,
Right.
the leasing segment, so they're no longer going to have all those how do we call it,
Long-term debt problem.
yeah,
Yeah.
not not the long-term debt, but the buildings and everything that they have, it could be sitting under investments or
So watch this. So now
mm,
on this one we have the health operation and we have the lease operation. Actually, the lease operation is the one that is on
the health
positive side.
operations has a high long-term debt,
Yeah.
8
Yes.
million.
Yeah.
So that's crazy. That's just crazy.
Yeah.
Then
Yeah.
definitely you'd be like, yeah, there's a going concern issue here.
Yeah. Yes. 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 And look at the retained earnings on the health operation. Look at the retained earnings on the lease operation. We already know who dragging the company down. And look at who has the cash and who has the bank overdraft.
Oh my God. Yeah, yeah. Oh, you've just given me like a lot of insights, because usually when you're in a rush, right? When you're reading the case in a rush, you don't really look at the financial statements unless there's a
Yeah.
trigger. But
Yeah.
when you look at this, you can already see, okay, there's already a problem here.
Right.
Because you can't say you're getting rid of the lease
Right.
operations, you're staying with something that looks like this with the health operation. It's very bad.
But on the other hand, look at this. Look at the inventory that they have. Like how much inventory they have. And look how much the accounts receivable they have. Half of the accounts
Inventory
receivable
is
is
not.
fixing everything. Right? That's interesting. And look at the more property, plant, and equipment. The assets are actually in the health operation. They're not in the lease operation. The lease there's not in. The lease is just investment.
Mhm.
Interesting, right? This is this is the time that you can see those things, right? You
Mhm.
can see these things, process those things, and when the time is shortened, and when you're under pressure, now you can make the time slow down for you by knowing what to look for, by seeing the information that is given to you. Because technically, listen this, when it comes to the, if we compare the exam as let's say tennis game, once you're in the game, you don't have time to practice. You don't have time to for the second shot. You don't have time to analyze the situation. Either you're going to make decisions right away, which turn out to be the right decision. Either you're not going to make that decision, and then you're losing the game. But when you're in the practice, that's where you, okay, if I hit it this way, that's gonna happen. If I hit it that way, that's gonna happen. If he did this, I'm gonna do this. If I hit this, I'm gonna do this. And then you go into the game and you already know what you improve. You know what the other opponent can throw you. Where's his weaknesses? Where are his strengths? Where are
Mhm.
your weaknesses? Where are your strengths? Try to overcome your weaknesses and use his weaknesses for your strength, and you're getting the result. Same, we're not doing anything different here,
Okay.
but we just practice single element to find out if this happened, can you do it? If this happened, can you do it? If this happened, can you do it? Can you do it to that level, or can you exceed a little bit here, a little bit there? Can you get the marks that you need to pass?
Yeah.
That's what we're gonna do here. And we're gonna
Was
continue.
this
Yes,
was this the IPO? Was this a May or was this a September CV?
that's September. That's September.
Why do they
So,
make assurance September so hard? This is
uh,
ridiculous.
I mean,
Why is
assurance.
September assurance so hard compared to what comes in May?
So
In May, they make
listen. Back in the days, 2015, 2016, 2017, the exam was only 1 year, only September.
okay.
Then I believe in 2018 they did 2 exams, May and September. Then 2019, 2020 went back to 1 exam, only in September, and now they start running May, September, because there's a huge backlog of the students who cannot pass. And they try to kind of get rid of those students. Make them either pass, either let's not go with the other either. No, because technically I can tell you I know students that cannot pass this,
Oh,
right? That's the other thing, and they cannot pass on the 5th time. I had one girl who tried to pass, and she couldn't pass till 2020. But she's on the performance management, and the
was she
perform.
writing?
Sorry,
She was writing May,
no.
September.
No. She's I think she might write in September. Yeah, she might write in September.
Yeah,
But it's tough because she's saying if I fail this time, then this one is over for me,
that's bad.
right?
I hope she gets it this time. I think
Yes,
she will. Honestly, I think like when you think of it, it's a game. There's certain triggers that they just want to see that you can identify, and that's it.
yeah.
It's a silly game if you think of it.
But the other thing is people act one way on the preparation and different way on the exam. On the when you on the not on the stress, you're able to see everything. When they put you on the stress and on the time constraint, you're not who you are anymore. So the only way you to overcome this is you to know in details and do the analysis that we're doing right now.
Okay.
So please try to keep yourself. How can I say the everything that we're going through? Try to put it in the right places, link it one to each other, and then we're gonna see at some point how they're gonna start repeating themselves. That materiality is gonna come again. This is the risk assessment is gonna come again. Now you see now the procedures coming again. You can easily see those things. The things that we discussed yesterday, we can see some things today. Procedures always gonna come. Then today we had this overall risk assessment. Today we didn't have yesterday impact on the audit report and IPO because that's very specific. Now the chances you to get IPO again, who knows? But you might get it.
Yeah, you never know with these
You
things.
never
Just
know,
come prepared.
right?
Yeah. Okay.
Go relax now. Go take a rest. Probably you haven't eat anything, so go eat something. Take a rest. Take a nap. Relax now. I want you to try to develop a pattern after the study session. Take a nap.
Okay.
Do
Yeah.
you know why?
Why?
To transfer whatever we did from the short-term memory to the long-term memory.
Okay, memory.
We don't need short-term memory. We need the long-term memory.
Yeah.
And the only way you to do that is to sleep.
Okay. Sounds
Okay.
good.
Okay. Great talking to you today.
Okay. Thank you, Ivan. So I'll see
Thank
you
you.
next week,
Yes.
same Saturday,
Yes.
same time.
Saturday. Let's talk during the weekend. Probably the same. Will be the same time.
Okay.
Okay.
Okay. Sounds good. Okay. Thank you.
Thank
Bye
you.
now.
Thank you. Bye bye.